GST, Goods and Services Tax, is going through major reforms. Prime Minister Narendra Modi announced next generation GST reforms in his speech on Independence Day.
इस दिवाली में आपको एक बहुत बड़ा तोहफा देशवासियों को मिलने वाला है। हम नेक्स्ट जनरेशन जीएसटी रिफॉर्म्स लेकर के आ रहे हैं। ये दिवाली के अंदर आपके लिए तोहफा बन जाएंगे। सामान्य मानवीय की जरूरतों के टैक्स भारी मात्रा में कम कर दिए जाएंगे।
And now the group of ministers on GST rate rationalization ended a discussion by agreeing to centre's proposal to restructure the GST system. So what is this new rate rationalization and how does it impact you? Let's understand. First, let's talk about the what aspect of it. GST or Goods and Services Tax is a unified indirect tax system in India which is imposed on supply of goods and services, replacing multiple indirect taxes like excise duty, VAT, service tax and more. Currently, there are 4 GST slabs: 5%, 12%, 18% and 28%. The group of ministers now have accepted the plan to replace the current 4-rate structure with just 2 rates: 5% and 18%. 5% will be for merit goods and services and 18% will be for standard items. The 40% levy will remain on small list of sin goods like tobacco. As per the proposals by the GOM, the panel has recommended that luxury cars also be taxed under the 40% slab. So basically, the move will see 99% of items under 12% bracket reclassified into 5%, while 90% of goods and services under 28% will be shifted to 18%. On GST on insurance, the proposal was to exempt the premiums for life and health insurance from GST, which as of now you pay 18% on premiums. The panel reviewed this proposal too. Most states supported it but said that it is important to ensure that the benefit passes on to the policy holders. Now coming to the why aspect of it. The proposal comes at a crucial time when India is facing high tariff threats from the US. India has kept its stance strong and said that it will not compromise on the earnings of its farmers and has not given in yet. But the tariffs can be a big blow to the GDP growth of the country, with warnings coming from Moody's and Morgan Stanley. The government says that exports worth $48.2 billion will face 50% tariffs after Trump's order, and this is not looking good. So now what the exporters are demanding is that improved domestic consumption to offset the losses from the high tariff pressure. Hence, the GST reforms come in as a boon, which explains why the stock market reacted very positively after the Independence Day break. As per SBI, the consumption boost from GST reforms may increase the GDP growth by 0.6%, about the same that Morgan Stanley estimated India may lose due to the US tariffs. Now, how does it impact you? Now, GST is a tax. So you pay it indirectly for goods and services you buy. So a lesser GST means cheaper goods. So basically, household budget will get a boost. As per reports, daily use items may get cheaper if this structure is implemented. Bicycles, ready-made garments, footwear, vaccines and more, including mobile, computers, stationery, fruits and vegetables, grains, dairy, cars and bikes may get cheaper for common man. Finance Minister Nirmala Sitharaman says that rate rationalization will provide greater relief to common man, farmers, middle class and MSMEs, and simplify the tax system too. So when will this get implemented? as of now, the group of ministers have given a go-ahead to this proposal. The GST Council will now take up these recommendations in the upcoming meeting, and then the final approval will be given to implement this new system going forward. What do you think about this? Let us know in the comments, and like, share and subscribe to ET Now for more such news and views.
If you like this video, then like, share and subscribe to ET Now.